Hey Bitcoiners, Lockie here from Edge 21. Today we're diving deep into Bitcoin's recent performance, what's shaping its price right now, and where it might be headed in the short term. We'll explore the impact of on-chain data, futures market activity, and macroeconomic factors that have all played a role in Bitcoin's volatile ride this month. Bitcoin's price has been all over the place recently. We've seen a strong bounce from around 83k to nearly 89k, but the big question remains, are we witnessing the start of a real recovery, or is this just another head fake before the next drop? Here's the deal. What we're seeing now is not the beginning of a bear market, but rather a healthy correction. Bitcoin has recently experienced a solid reset in many of its key on-chain metrics, and the way things are shaping up could indicate that we're getting closer to setting a local bottom. But just like in any market, it's important to manage expectations. This ride is not over yet. Let's break down what's going on, starting with some analysis from James Check. Check mentions that when the realized profit and loss ratio resets to 1.0, it signals a shift in market sentiment. This means that we're seeing profit taking slow down and the market is moving into a more neutral territory. The recent bounce we saw is likely a result of this reset. It's a healthy sign that the market isn't completely in panic mode, but it's not yet out of the woods. This next graph from Check on Chain, the sell-side risk ratio, helps us understand how stable the market is. When this ratio drops to its lowest levels, it indicates that profit-taking and panic selling are slowing down. Essentially, we're approaching a state of equilibrium. This is a strong indicator that Bitcoin might be on the verge of stabilization, which could mean less volatility in the short term. But remember, things can still turn in either direction. Bitcoin's volatility isn't something we can ignore. Looking deeper into Bitcoin's price action, we can't ignore what's happening in the futures markets. Leverage has been a huge factor here. Over the past few weeks, we've seen a dramatic rise in open interest, over 109,000 BTC added to futures positions. While this could signal renewed interest from traders, it also opens the door for more volatility, especially if those positions get liquidated. As you can see from the Bitcoin future open interest graph, also from Check on Chain, the sharp increase in open interest suggests that traders are betting big, either on the short side or the long side. But when these traders get caught in the wrong position, liquidations can happen fast, causing sharp price movements. This could explain some of the wild swings we've seen lately. Let's also talk about futures liquidations. The Bitcoin futures liquidation volumes graph clearly shows that the market has been dominated by long liquidations lately. Essentially, as Bitcoin prices rise, those betting on the price dropping, especially short sellers, are forced to close their positions. This is fueling some of the price action, but once these liquidations are over, there might not be much left to push the price higher without new buyers coming in. So what does this all mean for Bitcoin's short-term price trend? James Check believes that while we are experiencing a correction, the overall market structure is still solid. We're not yet out of the woods, but we're definitely seeing signs of the market setting a bottom. According to him, the price range of 70 to 80k is a value zone. This is where smart money should be buying, not selling. Looking at the short-term hodler SOPR or SOPR indicator from Check on Chain, we can see that short-term holders are currently taking losses, which is a normal part of the market cycle. This is exactly what we want to see in a healthy correction. Top buyers who bought at higher prices are getting flushed out. This means that smart money can now buy those coins at a cheaper price, setting the stage for future gains once the selling pressure subsides. Now, while James Check is optimistic about Bitcoin's long-term prospects, he also warns that we might see a few more volatile swings before this correction fully plays out. With futures market leverage still in play and a rise in open interest, we could experience more price choppiness before we see the next major rally. So where does that leave us? Bitcoin's price is in a zone of uncertainty. We've seen a solid bounce, but there's still risk on the horizon. The next big challenge for Bitcoin will be breaking above key resistance levels like 90k. If Bitcoin can do that, we might finally start to see more sustained upward momentum. But until then, expect more volatility and price swings, especially in the futures markets. Well, that wraps up our Bitcoin price analysis for today. We've covered the key factors impacting Bitcoin's price from on-chain data to futures market activity and how these elements are shaping its short-term price trajectory. While the market remains uncertain, Bitcoin's fundamental strength continues to shine through. Keep an eye on those key levels and watch for any signs of major shifts in market sentiment. So where do you think Bitcoin is headed next? Let us know in the comments below. If you want to stay ahead of the game, make sure to like, subscribe, and follow Edge21 for the latest Bitcoin price updates. Bitcoin moves fast, so stay ahead of the game at edge21.co. Thanks for watching, stay strong, and hodl on.